Maverick traders, welcome out to your market roundup. Corey here with you, February 5th. Let's jump into it. So we're going to take a look at meaningful news today and also over the weekend. Powell spoke on 60 Minutes on Sunday night. We'll touch on that. We'll talk about sector rotations, and then we'll highlight our best bullish, neutral, and bearish ideas. I don't always highlight neutral ideas, but we have another one out today.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today was a day where we kicked off the week a little bit on the wrong note. So Powell spoke on 60 Minutes and had sort of a hawkish tone. He basically was suggesting, well, we're not going to start cutting rates aggressively. It's probably off the table for March. Now the Fed is still forecasting 3 rate cuts in 2024. You've got major banks like Goldman Sachs pricing in 5 rate cuts and so forth. But that was certainly a note that got the markets off on the wrong foot. If you look at the returns, Dow down about 0.7%, S&P, NASDAQ down, Russell down 1.27, so underperforming. Oil up almost 1%, and oil is really traded to the beat of its own drum. It's not moving with equities. It's not, in many cases, it's moving opposite to equities. But certainly oil with a little bit better performance today. There was news out of Occidental Petroleum where they said that there will be supply shortages as soon as 2025 for global markets. Now, that's oil companies speaking their book, and they want some tight supply so the prices go higher. But if you believe that, well, oil longer term may be for an upward trajectory. Less supply of oil, prices tend to go higher. Advanced decline line, you can see 3/4 of stocks going down today, and then the 50-period moving average just continues to give some ground. Now we're at 50/50. So even though the S&P's up, you've just seen below the surface, it's giving away some power, some strength that it had. Now I've got a little different chart today where I'm showing divergences here. There was an S&P divergence back here where the S&P went to new highs, but the indicator, the RSI, 14-day RSI, made a lower high. And that's called a bearish divergence. Bearish divergence. 2 roads diverge. One is going up, that's price. The other's going down, that's indicator. And it shows a sign of basically lack of momentum, that you're running out of gas. Now, it doesn't tell you whether or not the market's going to turn down aggressively. It just says, look, we don't have as much strength, as much power as we had before. Well, the market can work that off with a sideways pattern. And it spent the next 2 to 3 weeks, this 3 weeks, going sideways. So was it correct? Was the market out of gas? Yeah. But then it stopped, it fueled up, and now it's taken off again. Now notice what's happening here just now. New high in the market. See how this peak is above this peak? Look at the indicator. This peak is below this peak. So again, same as what you were seeing back here, we're getting bearish divergences in the very short term. Lower high in the indicator as the equity markets make higher highs, right? New highs. So again, what is it suggesting? Well, we're running out of gas a little bit. We're probably going to stall out. But this can happen in 2 ways. You can mark time going sideways and fuel up, or you can get a pretty nasty correction. It seems that we're pushing towards that. It seems that we are running out of some of the momentum that we've had before. But again, this does not mean by any means that the market is due for a massive downturn or anything of the sort. It's just something that you can utilize in short-term trading to kind of say, okay, when should I push the gas and when should I pull back a little bit? Equities are still up, but notice we're extended away from the moving averages like we were back here. You know, if you think of it as when you're back towards the moving averages, maybe you're more at wholesale prices. When you're extended away, you're kind of at retail or expensive prices. So I think equities may just be running out of gas a little bit. The NASDAQ has not made a higher high from the prior high. So even with Meta, formerly known as Facebook, up 20% last week in one day on earnings. It was the biggest market cap jump in history, even as Amazon was up sharply. Well, it still was unable to make new highs in the short term. So we're just below the surface. Below the surface, we're now at about 50-50. Stocks above the 50 and stocks below. That already tells you there's a little deterioration within sectors and with individual stocks. So certainly continues to be a case of the haves and the have-nots. Things like Tesla that have been getting sold off, they just continue to sell off. Real estate got hit today. Utilities, which has been bearish. Materials, which has been more negative. The things that have been stronger, holding up pretty well. The things that have been weaker have been giving ground. That's what you like to see in your sectors. Now, as far as the market outlook, well, it's still bullish, right? We're still above the 20, the 50. We're still sloping upward. But we do have to be very mindful of the fact that, well, while we're going up, we know that below the surface there is a little deterioration that's been happening. Now, as we take a look at new trades, we've got a new neutral idea. Our last one from a few weeks ago, Microsoft, has just been a home run. We've got a couple of bulls, a couple of bears. On the bearish side, I'm going to focus on some things that are more crypto related, Coinbase and Square and so forth. Let's take a look. So first, highlight Zillow on the upside. So as you look at Zillow, we have an ascending triangle. We have kind of a little mini cup and handle, ascending triangle, whatever you want to call it. This is a bullish price pattern where the highs have created the stall out, right? That's the resistance zone in here. And then the lows, see how they're climbing higher. So whether you call it the cup and handle or the ascending triangle, it really doesn't matter. What matters is you can't go any lower than where we're at right here. This is a line in the sand area. It's got to hold there and pivot upward. And if it does, it looks poised to go up and through 60 and to new highs in the near future. NVIDIA, I've got on the sideways trade. Now this chart is anything but sideways, clearly. But look at the volume characteristics. The volume explodes on the breakout, and then volume re-explodes on the exhaustion. So the same way that you accelerate massively at takeoff, you accelerate massively at mission complete phase. And I call this the stages of the trend, where the breakout stage, think of it as the runner that just started a race. When the gun goes off, you get this jolt of adrenaline, and that's fuel, right? That's volume. That's that adrenaline spike. The middle of the race, you're just trying to get one foot in front of the other. You're just trying to churn out another mile and another mile. And then you see the finish line in the distance. And again, an adrenaline spike, and you sprint for the finish. I would anticipate that NVIDIA, it's very volatile, so let's not pretend that we can peg it right here around this 690 level. But the point is that although it's going to trade 50 points higher and 50 points lower, my guess is that in coming weeks, it's going to keep finding its way back towards this 690 zone. This is the exhaustion zone, and it's going to consolidate in that general area. Coinbase on the downside, it's really kind of the same pattern, but in reverse. Lower highs, equal lows, just started to break down today on volume. This is one that's just beginning a new race to the downside. COIN, bearish candidate. Now, possible trades, obviously anything bearish. If you look at a risk graph, here's your gain, here's your loss. Lower prices down here, 110, 120 right here. As it goes lower, your profitability goes higher. As it goes higher in price, you would have a losing position. So, some sort of bearish spread where as the price goes lower, you have profitability would make sense. Square, again, I'm going to put this on the bearish side. I think this was a little fake out move above those moving averages, and I think we're just on the cusp of going to and below $62 per share. So we've got some bulls, some not neutral, some bears. That's the way I see it. Divergences have started to emerge. The Fed rate cuts are being delayed. Firms like Goldman Sachs that were pricing in 5 rate cuts, they're starting to change their tune and so forth. These are all things that tend to happen closer to market tops. They were pricing in things that just aren't going to be quite as rosy. Initial jobless claims, but really economics wise, there's not a lot to watch and pay attention to, not a lot that can drive the market. On the earnings side, we've got Amgen, Alibaba, BP, Conoco, CVS, Caremark, Disney, Eli Lilly, Pepsi, PayPal, and Uber. Lots of companies still reporting. Hope you enjoyed this market roundup. Have a great week. We'll see you next time.